Welcome to MBA Solutions. I am Manjunath, working as an assistant professor at VVC Mysuru. In this video, let us discuss audit committee and its role. Before going into the video, if you have not subscribed to our channel, please subscribe and press the bell icon to receive more notifications. So what do you mean by audit committee? So according to section 177 of Companies Act 2013, it says Board of Directors of every listed company and other such companies prescribed shall constitute an audit committee. This is according to subsection 1, section 177, subsection 1. So, Board of Directors of every listed company and other such companies prescribed. If central government or any relevant government prescribes that these companies should have audit committee. So, every listed company compulsorily they should have audit committee, and any other companies prescribed by the central government or the state government should also form audit committee. Now what is this audit committee? So audit committee, for example, assume that there are 7 directors in a company. So in that, out of 7 directors, that is A, B, C, D, E, F, G. So out of 7 directors, what the section says, the audit committee shall consist of minimum 3 directors. So it is 3 directors are combined together, minimum 3 directors who are combined together to form a committee. This is how happens to all the committees. Even in audit committee also this is how it happens. So for audit committee, minimum 3 directors should be there in that committee, with independent director forming a majority. That means, for example, let us take director C, D and F. These 3 are a part of audit committee. So board of directors, they have constituted this committee and they informed that director C, D and F are the audit committee members. Now out of these 3, it says independent director forming a majority. That means minimum 2 directors or majority of the directors should be independent directors. So in this case 2 should be independent directors, because majority is 2 out of 3, 2 is majority. So this is how. For example, if you make 5 as audit committee, B, C, D, F, G, then there should be 3 minimum independent directors. Then only this committee can be formed, audit committee can be formed. So every listed company or any other company prescribed by the governments shall constitute audit committee. This committee should have minimum 3 directors and with independent director majority, forming a majority. That means out of these committee directors, majority number of directors should be independent directors. And it says majority of members of audit committee, including its chairperson, shall be able to read and understand the financial statements. So almost all, if possible, should read and understand financial statements, or majority of the directors or majority of the members of the committee, including chairperson. Any committee we make, there will be one head who leads the committee. So including chairperson, majority of the members should be able to read and understand financial statements, profit and loss account, balance sheet of the company. So like that they should be able to read and understand financial statements, because audit purely talks about checking the accounts, and if directors don't know how to read and understand financial statements, they cannot audit, they cannot check the accounts. In that case, they cannot be a part of audit committee. So this is what the section 177 of Companies Act says. Now coming to roles of audit committee. So what roles they play? What roles this committee play? So here, according to every audit committee shall act according with terms of board. So whatever board of directors decide, whatever terms and conditions board of directors frame, based on that they have to act. And according to section 177 and subsection 4, there are a lot of terms that has been mentioned, such as recommendations for appointment, remuneration and terms of appointment of auditors. So this committee can recommend appointment of auditors, remuneration to auditors, and terms of appointment, rules and regulations, conditions before appointment of auditors. So any auditor who wants to enter into the organization or the company, those auditors can be recommended. Those auditors can be seen, evaluated, and can be recommended to the board, saying that these auditors can be appointed. Their remuneration also can be discussed or recommended, and their terms of appointment, that means terms and conditions of their appointment, also can be recommended by audit committee. Next, review and monitor the auditor's independence, performance, and effectiveness of audit process. So whether auditor is doing his audit process properly, whether he is not getting influenced by anybody, what is his performance, what is his effectiveness of audit process, all this has to be reviewed and monitored frequently. So they have to check, they have to see whether auditor is performing better, whether auditor is getting influenced by somebody else and trying to make some adjustments in the accounts or not, what is his effectiveness of the audit process, all this has to be reviewed and monitored by the committee. Now, examination of financial statements and auditor's report. So whatever financial statements that has been generated in the organization and auditor's report, whatever report auditors give, that has to be examined by this committee. They have to see, look all the financial statement, auditor's report, tally it, see, check it, any discrepancies, any problems, any issues, any modifications that has to be needed, that audit committee has to examine, check. Then approval or modification of transactions of the company with related parties. For example, any modification of transactions required, any approvals are required with respect to accounts, any modification of transaction is required, that can be approved by the committee with the related party. Related party means who are related to the organization, who are dealing with organization, who are doing business with organization. If any approval or modification of any transaction required, this committee can approve it or check for modification, and that can be recommended to the board of directors. So any transaction with any party, any third party, any related party, then automatically this committee can check, change the transactional process, conditions, terms, then they can approve it or they can bring it to the notice of board. Then scrutiny of inter-corporate loans and investments. That means if the company has given loans to different corporates, company has given loans outside the organization, and different investment, scrutiny is also like examination, assess, check what is happening, whether they are repaying the interest rates, whether they are repaying the principal rate, amounts, investment, where we are investing, whether this investment is feasible, good, wherever we have invested, whether it is giving us proper returns or not, everything has to be checked, scrutinized, checked thoroughly. Then valuation of undertaking or assets of the company whenever necessary. So they have to value it, they have to check what is the asset of the company, what is the liability of the company if possible, so how much asset we have. So all this has to be checked by them whenever it is necessary. Then evaluation of internal financial controls and risk management system. So how internally you are controlling the finance, how budget is happening, what type of expenditure are more, what type of investment is there, that has to be checked. Then risk management system, whether all the loans are repaid back, all the credit sales, what is happening to the credit sales, how much risk management system is transparent, effective, efficient, all this has to be checked by them. Then monitoring the end use of funds raised through public offers and related matters. So you have pulled lot of fund from the public through IPOs, initial public offerings, or any fund that you have raised through public offers, what is happening to that, you have to monitor. That means committee has to monitor how these funds are used in the organization, and all these related issues has to be monitored and checked by the audit committee. Now coming to section 177 and other subsections, audit committee may call for comments of auditors about internal control system. Comments means, or they can ask the review of auditors, they can ask the progress of auditors, progress of certain areas like how internal control system of finance is happening, and they can ask their comments or reviews on observation, what they have observed, and reviews on financial statement before submitting to the board, and so on. So the committee has the right of taking the comments, taking the inputs of auditors in different internal financial control system, or what auditors have observed, and if they want to give any inputs to for improvement, and the board can give them to review the final financial statement of the company before they are submitting to the board, and all this. So the audit committee they have the right of doing all this. Then audit committee shall have the authority to investigate matter related to subsection 4 under this section. That means all the, in the previous slide we have discussed all the 7-8 roles of auditors, and those matters they can investigate anytime. So audit committee can investigate any of those matters anytime without any disturbances from anybody. Then auditors and key managerial positions personals shall have a right to be heard the meeting of audit committee when it is considered that auditors report shall not have the right to vote. That means, see, auditors will audit the financial statements of the company. They will give a report to the audit committee. Now audit committee has to see the report, and then they have to submit it to the board, and that will be discussed in the annual general meeting. And whenever there is some recommendations done by the auditors and audit committee, that bill has to be passed in the general meeting through votes. So this is how the procedure is. So once the audit committee feels any recommendations or any modifications done by auditors cannot be considered for voting, then they can call auditors and key managerial personals. That means maybe CEO, CFO of the company. Audit committee can call them to the meeting, and they can be given the right to be heard. That means they can ask the explanation of auditors and key managerial personals. That means audit committee can ask auditors why this recommendation is required, or maybe CFO or CEO of the company, why you have recommended this and this clause. If this clause is against the shareholders, then shareholders will not vote, or if this clause is not helping the organization to build their wealth, then they might not vote. What is your explanation on these recommendations? That can be asked, and auditors and key managerial personals will also always have the right to give explanation. So this is how audit committee works. So audit committee consists of minimum 3 members, and out of that audit committee members, majority of the members should be an independent auditor, and majority of them including chairman should know how to read and understand the audit or understand financial statements. Then they have certain set of roles where all those 7-8 roles they can review, they can check, see anytime, evaluate anytime what auditors are doing, and based on that they can recommend to the board also. And whenever they found that this auditor's report is not feasible to get votes in the general meeting and the bill could not be passed, then they can call auditors or key managerial personnel to come and give the explanation for those recommendations or those reports. So this is how audit committee and audit committee roles are defined according to the Act. Thank you very much for watching the video.